This meeting is being recorded.
Got it, recording. All right. You guys see my screen okay? I got a picture of my family to start. Okay, cool. So this is me. This is my wife. This is my beautiful family. I've got 4 kiddos from 5 to 12, and so they're everything to me. It's why I do what I do. And this is a little picture of us here in Florida, not too long ago. So again, this is just going to be a presentation. We'll get through it and have more time for questions too at the end. But essentially just this topic, right? Bitcoin, blockchain, crypto, where does it all come into play? Is it interchangeable? Like, we're just going to dig into this and kind of just demystify some of those complexities that you hear. There's a lot of buzzwords out there, a lot of misinformation, a lot of FUD, fear, uncertainty, and doubt in this space in a big way. And so we're just going to dive into that today. And again, this is one of those, like, disclaimer things, and our attorney will appreciate this, right? Like, I'm not a financial advisor. I don't play one on TV. Don't take anything I say as financial advice. It's informational, educational only. But I truly believe, and this is getting back into kind of my journey, my story a little bit. I actually, in all things, I started, my first career was in politics. I ran a big PAC, political action committee in Southern California. It was a crazy season of life, my first 5 years right out of college, but was around a lot of very, very smart people. To be on my board of 20 people, it was the kind of the big business community. We would write checks to candidates, get them elected, and then lobby. It was just the worst stuff that you hear of politics. Like, that was kind of it, right? It was like the dirty money and influence. But you had to be a decamillionaire to be on my board. And so I was literally a young 20-something learning from these guys a lot about business. I'm taking them to their country clubs to pay for golf and just learn and schmooze, basically. But when I learned I wanted to get out of that and really kind of be one of them instead of this political hack, I sat down with a couple of my mentors. And this is kind of the basis for my view of business, of entrepreneurship and investing. Is I sat down with them, and they 2 of them within the same week gave me very similar advice. They said, okay, Chris, you're at this pivot point in your career, and really to make a good living, to do well in life, there's 3 main verticals that you can go into. And if you do really well in one of those verticals, you've got kind of multi-generational wealth. And so the first of those they talked about, and they were both pretty heavily involved in, was real estate. They said, you can go and be a developer or start a construction company and do really well. Maybe you're a top realtor, and you're the multi-million-dollar realtor guy. Do I need to admit that? People coming in here, looks like.
I got it.
Sorry, I think I got host controls maybe, so I'll let people in when they come. So real estate was that first vertical, right? The second was financial markets. They said, getting into the financial space, that's a proven area where you can do extremely well. Go to Wall Street, work for a hedge fund. Maybe you're a top rated financial analyst or even a financial advisor, huge book of business, you can do very well. But thirdly, they said, was entrepreneurship. They said owning and operating your own company. And at that point in my life, I was 26 years old when I got this advice. I had clueless. I was not even knowing who I was, right? But I learned enough, from them. And they said, we think you are geared right now for that space, for entrepreneurship. But here was the secret they gave me, and this applies to anyone with a job or a business, is they said, as early and often as possible as you can, if you're going that route, whether you're an entrepreneur or you're in a job, is to dump your profits early and often into those other 2 verticals. So getting invested in real estate as early and soon as you can, getting invested in financial markets, and not just your traditional, hey, let's do a 60-40 bond split, but getting invested in some other types of areas. And so for me, that's really the basis of what I do. Entrepreneurship is kind of my first main vertical, and I'll always have that passion of starting and continuing on business. But I dump them into real estate and finances, and I've been doing that in a pretty big way here the last few years. So this presentation is just going to be about addressing some of these common questions. And if you're like most people, when you hear of crypto, blockchain, you think of this little graph on the right. It's like confusing, and it all kind of is it intermingled, and how does this whole thing work? But I'm just here to kind of demystify some of that. hopefully address some of these questions here on the left that you may have, and then we'll have more time at the end to dig into some live Q&A. But really addressing these kind of three existential questions. What is it? Why is it here? And where is it going? And we'll kind of look at that through the lens of historic financial instruments and kind of where this plays differently into the culture and kind of globalization, really, if you will. Hopefully this is going to play. I've got the sound on. I think Ryan's got this figured out here, but this is just a 2-minute quick video on understanding blockchain. I think it gives a really good graphical and kind of good overview of blockchain in particular. And so just watch this here for 2 minutes.
When you vote, have you ever wondered whether your ballot is actually counted? If you meet someone online, how do you know they're who they say they are? When you buy coffee that's labeled fair trade, what makes you so certain of its origin? To be sure, really sure, about any of those questions, you'd need a system where records could be stored, facts could be verified by anyone, and security is guaranteed. That way, no one could cheat the system by editing records, because everyone using the system would be watching. Systems like this are on the horizon, and the software that powers them is called a blockchain. Blockchains store information across a network of personal computers, making them not just decentralized, but distributed. This means no central company or person owns the system, yet everyone can use it and help run it. This is important because it means it's difficult for any one person to take down the network or corrupt it. The people who run the system use their computer to hold bundles of records submitted by others, known as blocks, in a chronological chain. The blockchain uses a form of math called cryptography to ensure that records can't be counterfeited or changed by anyone else. You've probably heard of the blockchain's first killer app, a form of digital cash called Bitcoin that you can send to anyone, even a complete stranger. Bitcoin is different from credit cards, PayPal, or other ways to send money because there isn't a bank or financial middleman involved. Instead, people from all over the world help move the digital money by validating others' Bitcoin transactions with their personal computers, earning a small fee in the process. Bitcoin uses the blockchain by tracking records of ownership over this digital cash, so only one person can be the owner at a time and the cash can't be spent twice, like counterfeit money in the physical world can. But Bitcoin is just the beginning for blockchains. In the future, blockchains that manage and verify online data could enable us to launch companies that are entirely run by algorithms, making self-driving cars safer, help us protect our online identities, and even track the billions of devices on the Internet of Things. These innovations will change our lives forever, and it's all just beginning. To learn more about the urgent future of the blockchain, please visit iftf.org/blockchainfutureslab.
Awesome. So just again, in kind of a good overview, and I like some of the graphics they use about, centralized and decentralized, and even just some of the examples. Then we'll get into a few of those later about voting, for instance, right? Like if you were to go down and vote, like you have to trust that your vote's cast, it's in that little ballot machine. And I mean, let's not even get into the politics of what the last election was like, right? But wouldn't it be cool if you could see exactly, and everyone was able to verify, yes, I just voted at 7:18 and here it is, right? And the next person comes in and it's completely transparent. That's really what overall blockchain is about. So let's dive into kind of what is it overall, right? So Bitcoin's the first and largest cryptocurrency built on blockchain technology. So look back at that sentence. I used to use all three of those buzzwords in one sentence, right? So Bitcoin is simply a crypto. It's a cryptocurrency that we use, and it's built on blockchain technology. Just like we learned about, it's completely transparent. It's a digital ledger. We'll get into kind of what that all means. But Bitcoin is really the first use case of that. And so it's really, they refer to it as like the gold standard, right, in crypto. Simply put, it's a decentralized, peer-to-peer, cashless type of currency, which is cryptocurrency. Established by Satoshi, and you guys have probably heard this name maybe, but is he a person? Is he a group? Is he a cartel? Like, we don't necessarily know, which is odd, and it makes a lot of people go, huh, that's kind of weird. Like maybe I shouldn't even touch this thing. But if you think about it in the context, it began in early 2009. The first idea of blockchain actually came from a white paper article back in the late 90s. And he took that and built upon the idea that, wouldn't it be interesting if we didn't have to rely on centralized governments that can create money out of thin air? And the context, right, is the 08-09 financial crisis. Really, our world just about crippled to its knees with a lot of the crises in the financial world that was happening. And so there's a lot of mistrust in what was going on, and all these bailouts were happening, and again, money creation. And he determined in his white paper, what would it look like if we didn't have this unlimited ability for central governments to create money and to inflate what we have and to devalue the dollar bills in our pockets. And so in the hard code of Bitcoin, only 21 million Bitcoin can ever exist. So it's a fixed, finite supply. And that's very attractive to people that understand kind of the monetary system and how it's worked and maybe failed, especially in certain government cases. You can see a lot of failed examples over the years. But essentially, it's a digital transaction that's verified. The records are maintained by this decentralized computing system where there's tens of thousands. I mean, if you're in mining, there's tens of thousands of these mining rigs and computers that are verifying transactions. Now, I don't have time. We're not going to get into cryptography and sort of the algorithms. And there's a lot of technical abilities here that you need a hard coder and someone who really understands that world to kind of deconstruct what cryptography is. But these are, they're logged on transactions. I can give you my wallet address. You can see when I've bought and sold and how much I have. And if you wanted to go through that type of transparency, you could. A couple of examples that I like to give, oops, sorry. I've done this even with my kids to try to explain to them, like, because they hear dad talk about cryptocurrency, right? And they say, hey, how's Bitcoin doing today, right? And so it's just something we talk about at our household. And we homeschool, so I have a fully different kind of approach of education, and I want to expose them to what's going on in our world. So, but I give this example of Google Drive because even they're familiar with it, and they use it in their schooling. If Ryan and I were going to say, hey, let's work on a project together, and I'm going to create a Google document, and I'm going to share it with him. As soon as I share that with him and give him edit privileges, he and I are both able to see any edit that was ever made from the inception of that file live, right? It's a live time, and I'm sure you guys are familiar with that, right? But I can't go back and say something happened differently or whatever. Once it's live and he has edit functions, that's fully transparent ability that we both have to see what was going on in that, versus I've got an old school little 2-drawer file cabinet still. And I could say, hey, Ryan, I'm going to create a document, and it's going to be a contract, and it's going to have this in there. But I'm just going to keep it here in my file, and he's never going to see it. That's kind of the difference, the comparison to a fully transparent digital letter that a blockchain is like a Google Drive file, versus the old school way of doing things is having it in a file cabinet. Now, what if maybe that became an issue for, Tatiana says, hey, there's a lawsuit, and I need you to produce this file that you say you have. Maybe there's something I didn't do in that file that was correct or incorrect, and I go back and change it before I submit that to her. That's the ability that centralized powers have versus a decentralized, fully open network ability. The other one I give, and again, kiddos, Legos, you have to talk their language, right? So Legos, let's just talk about that for a second, versus having something that's completely controlled and secretive by a centralized government. Lego, we have the bag open, we say, okay, this blockchain is going to start with a 4-piece white block Lego. And we go around the room. Is that correct? Did we all agree on that? Yes, that's a 4-piece block Lego. Okay, before we get to the next transaction, we've agreed. Now we're going to put a 6-piece blue Lego and attach it. It's going to have super glue between them, and they can never be torn apart. that's kind of how blockchain is built, because everyone involved in that network has to agree upon this transaction before you move forward. And once you move forward, what you've done in the past can never be changed. And so it's just the ability to have that transparency, that authentication from everyone involved. So the difference between these two, and you guys have probably heard of fiat money, which is really kind of a paper produced money that now is digital. Really, central governments can create some keystrokes and literally just out of thin air, create trillions of dollars. So take a look at the comparison here. Again, we've got a currency in Bitcoin and cryptocurrency it's created in a decentralized distributed computing power. It's governed by the majority of a network consensus, like we just talked about, versus a crypto or a currency like the US dollar that's created by a government, it's issued by the government, and it's governed by a central bank. And we can call them a bank cartel or whatever you want terminology you want to use, but they're the ones that really control money creation. In transactions within Bitcoin and cryptocurrency, you've got two parties involved, right? If Ryan and I want to distribute, if I want to send him Bitcoin or he wants to send me Bitcoin, there's no one involved in the middle of that. I'm literally just, hey, here's my wallet address, there's yours, I click send. In the legacy financial world, we've got intermediaries, we've got payment providers. They're gonna take their fees, right? I'm really involved in real estate. I do real estate transactions every month. I hate having to still go and pay a wire fee for a couple $100,000 to send something. And in a wire, yeah, it's gonna hit there within an hour or so. Sometimes I have to send an ACH that has to clear a couple of days or whatever. There's an intermediary involved there that really shouldn't exist. And I literally, I mean, my Chase guy knows, I roll my eyes every time I have to pay that wire fee, because I'm like, come on, man, I can send hundreds of millions of dollars if I had it of Bitcoin to somebody within a fraction of a minute for a couple pennies, and we're still doing this, like, come on. So just examples of kind of the legacy way of doing things versus how new monetary instruments are being used. Again, transaction time, can be pretty different there. Now, why is it here? Again, I mentioned this in the kind of the aftermath of the 2008 financial crisis. People are saying, and if you think about even today, how much more this is accelerated, but the ongoing inflation of our money. Look at any market, whether you're talking about fruit or real estate or the stock market, everything has gone up pretty considerably in value, especially in the past year. Of the 28 trillion or so that we have as a debt now in our country, a third of that was created in the past year. Let that sink in for a second. A third of that debt was created in the last year. And so people talk, about, oh my gosh, housing prices are crazy. The hot market's hot. The stock market consistently is hitting all-time highs. That's the result of inflation, of creating and pumping more money into the system. And so people are saying, hang on a second, central banks have way too much power, and we can talk about the 1% versus the 99 and all that. But banking in general has tended to help that top bracket, and those that really feel the brunt of inflationary policy are the middle class and the lower class, right? They kind of have a fixed income or a fixed way of growing their wealth. And so there's some imbalance there. This whole idea of centralized versus decentralized. And, you're seeing this play out in election cycles all around the world of, communist and socialism versus maybe a more open and capitalized type of markets. People are talking a lot more about that. Why do we give so much power? They're really questioning this. This whole centralized idea too. Remember that Google Drive versus the file cabinet example I gave. Do you guys recall this news item a few years back where Wells Fargo got caught red-handed creating 3.5 million different accounts fraudulently? They just touch on, you're smiling there. You have some inside information in this?
I actually worked for 4 months over COVID. So like 6 months ago, I had a 4-month project doing compliance for that very thing. And they hired outside counsel to patrol their internal compliance.
Oh,
So it's
yeah.
layers of compliance to see if this is still happening. And it is.
Wow, I'm sure it is. Yeah. I mean, they were just one example that got caught, right? So, but if you recall that story, I mean, it was literally account executives and managers and whatever were being incentivized to create in people's names and customers' names, even in dead people's names, credit card accounts, banking, savings accounts, because they would get bonuses on that. And so that's that old school file system method. They were the ones that had control of the information. They were the ones that said this happened, versus having a completely open network. You wouldn't have that problem. And so people are realizing technology is giving us abilities that we've never had before, that really kind of helps open up data. It opens up power and centralization in a different way. Again, capitalism, socialism, distrust, technology, it's all colliding, and you're seeing a lot more of that. And when I mentioned earlier about this topic that I've been an avid reader in and researcher for years, was definitely more of a fringe. You kind of felt like it was a little bit of like a Burning Man crowd versus like anarchist versus whatever. Now it's kind of becoming a little bit more of mainstream acceptability as people understand what it is and what it can do. And so I think that's a huge thing here. Lastly, dollar weaponization. If you talk about geopolitical nature and, China or other people holding a huge amount of our debt, what could that do if they just decide, hey, we're done with this centralized system, and we need to move to a different type of financial tool for our country or for others. And now you're seeing, especially this year, every major government in the world is talking about, hey, we're going to be working on our own cryptocurrency, which is CBDC, central bank digital currencies. They have been trashing cryptocurrency and blockchain and Bitcoin for years. And now, and I'll get to some information here in a minute, but now they're starting to realize, okay, this isn't going away. And yeah, we understand that there's technology here that could be used, and maybe this is more of a cashless system. They're still going to have their version of that that's going to be centralized, but they're utilizing technology that cryptocurrency and Bitcoin is built on to create their own. So let's take a look at kind of where is it going. And this is, this is something where there's no crystal ball. There's that saying that those who live by the crystal ball eat glass. So I'm not gonna go there and say this is where I think it's gonna go in 1 year, 5 years, 10 years. But take a look at these price charts for a minute. Okay, here's Bitcoin on the left. You've got Apple, Amazon, and this is Tesla. And this is kind of the charts here are different dates because I want to show you kind of the reality of this. But let's take a look at Apple. I mean, Apple, this is, back in the 80s, 90s, 2000s. If I were to just zoom in on that, their charts could look similar to the last 20 years. But if you were like, you know what, gosh, I should have gotten involved back in 2000 or 2005, it'd been great. Or boy, that dip in 08. But look how it just keeps on going up. This is pre-Apple split now. So Apple's somewhere in the 500 range, 600 range now, I think. It just keeps on going. And so similarly with Amazon, if you were like, man, I should have bought Amazon when it was a few bucks, or, last couple of years ago, 10 years ago, and it was $100. And now we're looking at like what, $3,000-$4,000 on this. So same with Tesla, right? Tesla has just gone off the charts in this past year. Now it's been tied to Bitcoin and crypto a bit because of what Elon's done. And so it's done some interesting things here this last year. But when people talk about Bitcoin and go, gosh, I wish I would have got in at, pennies or a fraction of a penny or $1, $100, $1,000, where is it going? This is a chart of just as I was buying actually. And people were like, okay, that would have been nice, right? But if you keep on just going up and go, where is this going, and the finite supply of this and the technology that's embraced this, you can see where this could just still be kind of early innings of where we are. And there's a lot of really smart people that are projecting some pretty massive numbers in this space. And so, again, I don't have a crystal ball. It's had a very volatile year, like some of these stocks have, right? I mean, look at Apple's major dips. It's not uncommon for cryptocurrency to go up hundreds or thousands of percent and then have a short little bear market stint of accumulation where it drops 50, 60, 80% for a period of time. And then it accumulates and heads back up. And so we're in that period now. Again, I mentioned I was at the Bitcoin conference here recently, and you guys are familiar with the Winklevoss twins? They were the guys that said Zuckerberg stole our idea for Facebook, right? And those two, well, they were very early Bitcoin adopters. Okay, and they're both billionaires as a result. But they were put on the spot by this panel, and they said, "Hey, so you guys are obviously in this a long time. You have made a lot of money. How do you guys still buy Bitcoin?" And they both said, "Yes, every month." And the guy was like, "Wow, that's interesting. Like, why?" And he's like, "You know what? Probably like everyone else in this room, we wish we would have bought more earlier." And so for us, we're just continuing to dollar cost average because we want to accumulate more. They understand, and a lot of the smart institutions are understanding, you have a fixed supply of 21 million Bitcoin that can ever be created. And as you get more and more individuals, retail, institutions involved, the flood of money that could come in is pretty spectacular. And so even those guys who bought in the pennies and dollars are still buying in the 30, 40, 50,000 range because they understand they just want to accumulate more. And that was pervasive across most of the major speakers who were in this space and billionaires to date. But take a look at this too. And this has been, I actually created this whole presentation last fall. But this could be just about any company you can see now in the S&P 500. Every major company now has their fingers in this space, from banks to legacy institutions to, now you've got Visa and MasterCard and Square and all the PayPal, right? All these financial institutions that we all use and is app-based now are in this space in some way. Even while they were trashing Bitcoin and blockchain publicly the last couple of years, you can go back and see JP Morgan and Goldman Sachs and just about any kind of bank, HSBC, they were all hiring people to create their digital currency desks. They were hiring compliance people. They were hiring attorneys that knew blockchain in the space to kind of get positioned because they knew this was something they were going to be involved in. I have some friends in the JP Morgan world up in New York, and they say, it'll be interesting when it's revealed how much we've bought and when, because that time is coming. And now you've got all these institutions that are jumping in, and yet we're still at a fraction of adoption. And so here's some growth catalysts, growth challenges, and just taking a look at some of the numbers here, right? So you've got $37 trillion of money in circulation here in the US, right? And so the cash balance sheets of just the 500 S&P 500 companies, their cash balance sheets are probably north of this now, but let's just say 2 trillion. Bitcoin itself as a market cap is only a $500 billion. And so if you think about what could happen as if just the S&P followed Elon Musk and MicroStrategy and a few of these others to say, you know what, we're going to put 1%, 2%, 5%, 10% of our cash reserves only into Bitcoin, what that could do alone to spike the growth. And then you talk about the number of, I think this to date, we're somewhere around it's $55 trillion is the total US market cap of our stock market. So $55 trillion Okay, the global market cap of all major indices around the world is approaching $110 trillion. And so what if you have more and more hedge funds and institutions that say, and that are promoting strategies internally, but are not yet there to the public to say, you know what, it would be smart to put 2% or 5% of your savings or your investable assets into this space, right? If just 5% of global wealth, that would put Bitcoin at $6 trillion market cap. And here we are at 500 million. So that's a 10X just if they were to say that this is what you should do. And you're having more and more smart people who have got into this space recently that are hedge fund managers around the world saying, this is what I suggest. In fact, if you're familiar with the name Ray Dalio, Bridgewater CEO founder, he's the largest hedge fund manager in the world. He recently came out this year. Again, one of those guys who trashed Bitcoin, didn't understand it, didn't understand blockchain, all that kind of stuff. He came out and said, yes, I own Bitcoin. And I actually agree that Bitcoin is better than bonds. Bonds make up about 40% of their overall portfolio. And they're transitioning more and more of that into Bitcoin and cryptocurrency. And so when Ray Dalio speaks, other people listen, and you're starting to see more and more financial institutions take that approach of saying, what would it look like to dip our toe in and put 1% this year, have 2%, have a goal of 5% by 2025 is what a lot of them are projecting. So population-wise, very small amount of people own Bitcoin. Americans are the vast majority in terms of any country globally. And yet, if you were to do a poll at the next time you have a family dinner or get friends together for a happy hour or whatever, hey, how many here own anything meaningful in Bitcoin? You might get 1 or 2 people in a room of 10 that would say that. And so just think about that again, from a supply and demand perspective. If you got this fixed supply of 21 million and how many people are involved, you can kind of start to do the math in your head in terms of, okay, where could this be long-term? Challenges, there are many, right? And so I mentioned FUD earlier, fear, uncertainty, and doubt. That is being propagated by media, by governments often. Certainly worldwide governments are trying to figure out, how do we contain this? Do we contain this? What does regulation look like? The SEC will likely be coming out this year saying, are we going to treat this as a crypto, as an asset, as a currency, as property? They're really trying to understand, how do we put some regulation around this? I'm very interested in this space because the governments are trying to figure this out, and they're saying, if we can't beat them, join them. And from a geopolitical perspective, is China or Russia or Europe going to do this? Do we do the opposite? Do we do they're just kind of like at this point of playing chicken a little bit, like who's gonna blink first here, right? And how are they going to approach this? The head of the SEC, Gary Gensler, who was recently appointed this year, is a crypto advocate. He used to teach blockchain and crypto at MIT. And so he's very entrenched in this world. He knows it well. There are many in the space of the cryptocurrency community that were really cheering the fact that he is now our SEC head. And so he's very knowledgeable on the subject. He has a deputy of the SEC that has been a big critic. And so it's just going to be interesting to see how that all plays out. So what action to take now, and I'll end here to give some time for Q&A, but again, continue to do your own due diligence, your own research. Again, I'm not giving financial advice here. I'm just going to share kind of what my journey has been a little bit like, but assessing your current financial situation is a huge thing. So making sure that you have, your 3 or 6 month or whatever your preferred allocation of emergency savings might look like, that's always a smart thing to do. This is that space of, you don't want to risk more than you can lose. If you have to eat next week with some money that you want to put into Bitcoin, don't do that, right? Like, use some sensible approach here. But determine also your asymmetric risk reward relationship. and if you're not familiar with that, just real quick, it's does this fringe opportunity, this investment, do I see that it has pretty substantial potential to be a multiple of what it is a year, 2, 5 years from now, versus maybe just the stock market overall? You know, if you were to buy a Bitcoin versus one share of the S&P, which one do you think could 5x in 2 years or 5 years? Using history as a guide, we know that there's certainly the ability for a small market cap type of new technology that could have the potential to really do significantly well compared to maybe a more legacy S&P ETF, right? And so determine what it is for you. If it's 1%, 2%, 5%, you know, for me, when I started, I bought my first Bitcoin and some other basket of cryptos back in 2016. And so again, lucky, wish I would have bought more, all that kind of stuff, right? But I had a very conservative approach that I learned that said, I'm going to put 3% of my net worth in there. As soon as it doubles, I took off my initial investment. So I wish I would have still had that, right? But it was just a conservative approach to say, I'm going to put this in here. I can afford to lose 3% of my net worth because I know that I can earn that back in other ways. But if 3% of my net worth, and that grew 10x over time, which, you know, some of that certainly has, or more, that's pretty awesome to be able to just risk a little for some potential massive appreciation. So what would that look like for you? You know, you need to do that determination for yourself, but I've got other resources. I'm going to let Ryan take it back over and field any questions you guys may have.
Okay. Thank you very much, Chris.